Well, financial savings of Indian households have bounced back after shrinking for 2 financial years. It rose by over 16% in FY24. However, government data shows that savings in physical assets began to taper. Sapna Das joining us now with more details. Sapna, take us through the government data.
Well, the trend is pretty interesting and probably on expected lines. So after a gap around 2 odd years, the financial sector savings for the Indian households, that seems to have bounced back. So as you rightly said, the numbers around 16% growth registered in FY24. If you compare it with the previous financial years, that was a negative, minus 26%. That negativity got further down, and then finally you have the comeback. Of course, what has happened in the meanwhile is that the physical assets, savings in the form of physical assets, that has really come down. So probably that has also helped in the bounce back of, financial savings for Indian households, so to speak. Now, in terms of physical assets, again, whopping growth of around 39% in FY22. That's now down to around 6.3% in FY24. Probably the real estate prices have really grown. And physical assets can be other things also, like car purchases, stuff like that. So, that is clearly tapering off. Last but not the least, also in terms of the savings in terms of gold and silver ornaments. So a whopping growth of around 51% in FY22, which is now just kind of fizzled out to less than 1% in FY24, obviously on the back of rising silver and gold prices. So that's one aspect of the data. Now, what it really shows is that why are the financial savings back for the Indian households? Probably there's a gush in terms of bank deposits on the gross side, but on the net side, the loan outgrowth, loans have actually outstripped the deposit growth. So that's one aspect. Second, the deposits that have come to the bank, so which are the companies which have suffered? It's the NBFCs. So there the deposit mobilization is not only negative, but also the loan disbursements are negative. That's a point to be noted. Also, otherwise, in terms of your gross savings, small savings has shown a big jump of over 50% in FY24. That's a very stable source of, financial sector savings. Also, in terms of your mutual funds, insurance funds, and pension funds, they have grown by a whopping 16%. So all said and done, these trends are likely on expected lines. And of course, this is FY24 data. The Ministry of Statistics will come out with the next set of data next year, sometime in May. And it'll be equally interesting to watch what has happened in FY25 as far as the Indian households' financial sector savings are concerned.
Right, Sapna, thanks so much for that. We'll, of course, come back to you to get more on that. But moving ahead.